Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today is October 21st, 2025, and the global crypto market cap is up just a little bit, 1.2%, sitting at $3.84 trillion. Still quite a way off that $4 trillion mark.
Yeah, on the surface, it looks, stable, almost boring even.
Right.
But underneath, there's this really fascinating, maybe even dangerous contradiction playing out. We're seeing huge institutional players diving in, getting legitimacy through things like ETFs.
But at the same time,
The actual technology, the networks these things run on, still worryingly unreliable in some cases.
exactly. So that's our mission today.
Yeah.
Unpack that tension. You even see it in the daily flow numbers. Bitcoin ETFs saw massive outflows, like $170 million leaving.
Ouch.
But then Ethereum ETFs, they pulled in $82 million. It's just mixed signals all over the place.
Totally. Why is the smart money moving in on the regulated side while seemingly, ignoring these fundamental tech risks?
Let's maybe start with the institutional side then, because BlackRock moving into Europe feels like a pretty big deal.
It absolutely is a major signal. Their Bitcoin exchange traded products, the ETPs, they're now live, trading on the London Stock Exchange, other big European exchanges too.
And this happened right after the UK regulator, the FCA, basically reversed its ban from 2021, right? The one stopping retail investors from getting involved.
Exactly. And the impact is huge. These ETPs, they let investors get regulated Bitcoin exposure without actually holding the crypto, without needing private keys.
Which lowers the barrier significantly.
Hugely. It boosts Bitcoin's credibility in the traditional finance world, drives demand, increases liquidity. And look at BlackRock's main fund, iBeto. It's already holding, $85.8 billion?
Wow.
It's the biggest spot Bitcoin ETF globally. That kind of weight, that kind of institutional buy-in, you just can't ignore it.
It definitely brings legitimacy. But I have to ask, isn't there a bit of irony here? Relying on one massive player like BlackRock with IBIT dominating everything, doesn't that kind of go against the whole original idea of decentralization?
That's a fantastic point. It really does raise deep questions about where crypto is actually heading. Are we just swapping old gatekeepers for new regulated ones? But the institutions aren't stopping at just Bitcoin exposure. The hunt for yield, it's pushing into other areas. Van Eck is showing us what might be next, focusing on Ethereum's staking mechanism.
Okay, tell us about that. Van Eck's planning the first Lido-staked Ethereum ETF. What does that actually mean for investors?
Right, so this is pretty innovative. They're trying to blend the regulated ETF structure with yield generated from decentralized staking. The fund gives institutions exposure to Ethereum staking rewards through stETH.
stETH, being the token you get back when you stake your Ether through Lido, allows you to keep liquidity.
Exactly. It represents your staked ETH plus the rewards. So institutions can basically buy this ETF, get exposure to those staking rewards, but without dealing with smart contracts or locking up assets directly on-chain. It's compliant, transparent, potentially tax efficient for them.
And Lido's already a giant in this space, securing, what, $40 billion?
Nearly $40 billion in total value locked, yeah. And they've paid out over $2 billion in rewards already. So if Van Eck gets this approved by the SEC, which seems likely.
It dramatically lowers the barrier.
Completely. An institutional trading desk doesn't need crypto wallets or deep protocol knowledge. They just buy the ETF ticker through their normal broker. Instant access to staking yield.
So the thinking is, if this takes off, Ethereum staking could feel as normal as, I don't know, buying dividend stocks or corporate bonds by maybe 2026.
That's the potential upside, yes. That's the optimistic pitch.
Okay, but now we need to temper that optimism.
Absolutely.
Yeah.
Because we have to look at the other side of the coin, the technical reality check.
Right. It's funny, you often see posts maybe on LinkedIn or somewhere, whenever a big centralized service like AWS has an outage, people jump on saying, see?
Yeah.
Decentralized systems are better.
Yeah, the classic crypto fixes this argument.
But it ignores a crucial difference, doesn't it?
Yeah.
If AWS goes down, they have customer support, service level agreements, potentially legal liability for damages.
Exactly. There's recourse. If a purely decentralized network just stops working, there's generally no one to call, no help desk, and certainly no one writing you a check if you lost money because of it.
Let's get specific, because the history here is important. Even Bitcoin, the original, the most robust network,
Yeah.
it's actually gone down twice.
That surprises some people.
Yeah. Once for over 8 hours back in 2010, and again for over 6 hours in 2013. These weren't trivial glitches.
And Bitcoin's the strong one. Then you look at something like Solana.
Oh boy, Solana.
It's kind of become the poster child for downtime, hasn't it? More than 6 major outages in just 5 years.
Some were really long, too. Like September 2021, it was down for over 17 hours.
And February 2023. It's really 19 hours offline.
And here's the really telling part from the analysis we looked at. For that 2021 outage, the fix involved the network validators, the people running the nodes, having to coordinate outside the network and make a centralized decision to halt block production and restart the chain.
Think about that. The decentralized network had to be stopped and restarted by a centralized agreement. The irony is just thick.
It really highlights the dilemma, right? Institutions want reliability, but achieving that reliability sometimes seems to need exactly the kind of centralized control that crypto was supposed to get rid of.
Precisely. And it's not just Solana. Ethereum had its big crisis with the DAO hack back in 2016, leading to that controversial chain rollback. Centralized exchanges halted ETH trading for months then.
And even Ripple, which isn't proof of work or proof of stake, it had a major node failure last year, needed an emergency update. And another outage for over an hour just this February.
So this history of fragility, of downtime, it has to be factored in when you see all this institutional money getting excited. The foundations are still, in places, quite shaky.
Okay, so fragile tech on one side, but big money still looking for opportunities on the other. Let's zoom out a bit and look at the broader market and macro picture. Where is the money actually moving?
Well, decentralized exchanges, DEXs, they still handle a big chunk of the volume, about 45%, with Uniswap way out in front at nearly $6 billion in recent volume.
And Bitcoin's dominance is still strong, around 57%, compared to Ethereum's, 12, 13%?
Yeah, roughly 12.6% for Ethereum. But the interesting race is maybe just below them. Look at the market caps for BNB, the Binance Coin, and Ripple's XRP.
Right, the gap there is getting smaller. BNB is around $156 billion, but Ripple is up near $147 billion.
It's getting really close. That battle for the number 3 spot shows there's real interest in specific ecosystems beyond just Bitcoin and Ethereum.
And then there are the external factors. Politics always plays a role. President Trump's recent meetings about China trade, that introduces uncertainty.
Definitely. And what's interesting from the sources we reviewed is how the market's reacting or maybe not reacting.
Yeah, it's not necessarily the fear of tariffs themselves causing volatility.
Exactly. It's the lack of clarity, the uncertainty. Markets fundamentally hate not knowing what's going to happen. Once there's a decision, tariffs go up, down, stay the same, that uncertainty premium gets removed. Prices might jump or drop initially on the news, but then things tend to normalize because the what if is gone.
Makes sense. Shifting gears to company news, blockchain.com, lots of people will remember it as blockchain.info back in the day. They're planning to go public in the U.S.
Using a SPAC. That's a special purpose acquisition company. Basically a faster way to get listed than a traditional IPO.
Kind of a backdoor listing sometimes?
Sort of, yeah. Their valuation has been all over the place, $5 billion, maybe $7 billion. But the real story might be who they're hiring.
Ah, yes, the Goldman Sachs connection.
A former Goldman CFO and a new COO. These hires scream, we want to look legitimate and stable for traditional investors ahead of that public listing.
Trying to build that bridge to Wall Street. And speaking of market movers, you can't ignore the influence factor, especially with meme coins. Elon Musk posts one AI video on X,
Featuring the Floki Dogcoin character as CEO.
and bam! The Fluky token price jumps 27% almost instantly, pushing its market cap towards $830 million.
It's just incredible, and it perfectly highlights the wild speculation and, frankly, danger in that meme coin sector. You mentioned President Trump's official meme coin earlier.
Yeah, that one had a spectacular rise and fall, launched near a $15 billion market cap, then crashed something like 90%.
Exactly. These pumps, driven by social media hype or celebrity mentions, they often end very badly for people who jump in late. Massive volatility.
Okay, so we've got volatile markets, shaky tech foundations, meme coin madness, which brings us nicely to Dubai. Because what they seem to be doing is trying to build guardrails, trying to engineer trust into the system where the tech itself might be lacking.
That's a great way to put it. Dubai isn't just letting crypto happen. They're actively building governance frameworks. Take their push for decentralized digital identity, or DDID.
This is the partnership between BIA Group and Hashgraph.
Correct. They're deploying a system called ID Trust, built on Hedera's DLT. And importantly, Hedera doesn't use a typical blockchain. It uses a different tech called a hash graph, specifically a gossip protocol.
Which is meant to be faster, more secure for enterprise stuff.
That's the idea. Enterprise-grade speed and security. And the key feature of ID Trust is embedding trust through things like quantum secure cryptography. It's designed for serious uses. Verifying identities for KYC, securing medical records, accessing government services online.
And they're rolling it out first for their own employees, then expanding it.
Yeah, internal use first, then extending it to BIA's external systems in areas like real estate and healthcare. It's a clear strategic move towards building a verifiable, trustworthy digital infrastructure.
And the second big initiative tackles AI, another area where trust and reliability are huge issues.
Absolutely. The Dubai Finance Department just issued a directive, a pretty strong one. Government bodies there can only use AI suppliers who have the official Dubai AI Seal certification.
Wow, okay, so they're mandating a standard.
They are. The AI Seal is free for companies to apply for through the government website, dub.ai. It assesses them on things like transparency, governance, reliability, their staff, their projects.
So it's a proper vetting process.
Yes. It's about ensuring any AI the government uses meets certain standards. It directly supports Dubai's ambition to be a leader in responsible AI adoption by basically cleaning up the supply chain.
Okay, so let's try to bring this all together. We've seen institutional money pouring in, seeking legitimacy through regulated products like BlackRock's ETPs, VanEck's upcoming staked ETF. That's the validation story.
Right. Capital and credibility are flowing in. But that core technical risk, the reality of network downtimes we saw with Solana, even Bitcoin historically, that hasn't gone away. It's still a major vulnerability users have to consider.
But then you have places like Dubai acting as a counterweight. They're not waiting for the tech to perfect itself. They're building trust through proactive regulation, like the AI Seal, like the DID project.
Exactly. That governance layer seems increasingly crucial for attracting and keeping that serious institutional and corporate money.
So we talked about VanEck's staked Ethereum ETF possibly making crypto yield feel normal, like buying stocks maybe by 2026. But given everything we've discussed, the history of outages, the volatility, here's a final thought to leave with our listeners. How might this blend traditional regulated finance wrapping itself around these still somewhat unpredictable decentralized reward mechanisms? How might that actually redefine what passive income even means, especially the risk part of it, for the average investor over the next few years?
That's a huge question. It fundamentally changes the risk profile of what sounds like a simple investment.
Definitely something to chew on. Thanks for breaking all that down.
My pleasure. Always interesting times in this space.
Mm.